Joining us right now to continue the conversation about Apple is Wamsi Mohan of Bank of America Securities, senior equity research analyst. He reiterated his buy rating on Apple and raised his price target to $320. And also, for a broader perspective, I want to bring in Mitchell Green, founding and managing partner of Lead Edge Capital. Good morning to both of you. I don't know how much you spent looking at the numbers last night, so much as the tone and the words of Tim Cook as to what the future may look like. What were you focused on, Wamsi?
Yeah, thanks, Andrew. Thanks for having me. Good morning. Look, I think that I was really focused on understanding if management team felt that there was enough visibility looking out into the future and rolling out products at the relatively good cadence that they've been able to maintain so far. And we walked away with the impression that, yes, things might be very marginally delayed, but the crux of it is that they're holding up extremely well with only possibly 2% down through this pandemic for revenues in the first half of calendar 20, which is just amazing considering that there's so much hardware component still in the business. And secondarily, I think the fact that they did not give a guide does not equate to the fact that there is no visibility. In fact, the company went out of its way to provide a lot of visibility on every product, on services, with a lot more detail than they normally do. So I think that this was a quarter that Apple just did not want to guide because there is a black swan issue where they've had to pull the guide just last quarter after reporting a stellar quarter in December, and I think that they don't want a repeat of that. So just hedging their bets a little bit, but I don't read it as really anything that is impacting the business from a secular perspective, which is great to see. So I think the multiple actually re-rates on the stock relatively quickly.
Mitchell, does that make sense to you?
Yeah, I would agree with that. Look, Andrew, Apple's not a name we follow as closely because we follow more, the e-commerce software stocks. But it's an incredible company, and the demand for their devices is growing through the roof, as you know.
Right, Mitchell. What did you make of Amazon's numbers, but also its decision to take this $4 billion in profit that it would normally make and say it's just plowing it straight back into the business?
I think so look, the top line numbers for Amazon are incredible. 1,000 basis point improvement, 1,000 basis points better growth in the online retail, 800 basis points more for third party. AWS is growing awesome. Amazon is at the beginning, is literally riding two of the biggest mega trends in tech. One being, the demise of brick and mortar retail and the, rise of e-commerce. You'd think, 08, 09 accelerated it. This is like going to put it into turbocharge mode. And then just the movement to cloud, which we're in the very early innings of. I think it's really smart what he's doing. And, the reality is the stock is where it was 2 days ago. And, it hit all-time highs yesterday. And so I think Jeff and his entire team are making absolutely the right.
12 months from now, what do you think?
A lot higher than it is today. I mean, $3,000 a share. You see Goldman and Morgan Stanley both raising their numbers. I think within 12 months, it's probably a $3,000 stock. Look, that doesn't mean it's not going to pull. Within the next 12, 15 months. But I think if you look at it over the next, 2 to 3. No, I was going to say, if you look at it over the next 3 to 4 years, I think the stock can double.
Wamsi, that's a remarkable thing. You think the Apple stock could double?
Yeah, look, I mean, Andrew, there is a stock here that we're talking about that's gotten north of $1 trillion in market cap, right? So when we look at just the sheer scale of it, I think that it's going to be contingent on how a lot of other stocks do. Where's that money really going to come from? Tech already has soaked up a lot of capital from a lot of other places. So to say that the stock would double is not sort of within our forecast period range. I mean, it could happen, obviously, but at the same time, when we look at where numbers are today, we think the numbers could approach again $17 in earnings per share, which is where people were pre-COVID for calendar 21. So what does that really mean? I mean, can you put a 22 multiple on a stock like this because, the earnings are actually holding up tremendously well? Sure, and that would get you close to a $400 stock. So you can imagine and construct scenarios that are quite bullish, but I think the services would have to be a much larger component than where they are today to justify the doubling of the stock.